All right, Matt, let's wrap this week up here with one to watch. What stock has piqued your interest for this coming week?
Well, it's really tough to pick just one bank stock because they've been beaten down so much, and I wish I could own them all, which I've recommended an ETF that owns them all before. But one in particular I am curious about right now is Bank of America. It's the bank stock I've owned the longest in my portfolio. It's one of my biggest investments. It's been crushed lately, especially with this interest rate saga. Bank of America is one of the more sensitive banks to long-term interest rates. They have a very disproportional level of non-interest-bearing deposits. So meaning that with those deposits, when they loan them out, whatever interest rate they get is pure profit. So if the long end of the curve is kind of overblown in its downtrend, if the economy is a little better than people seem to give it credit for right now, and if the Fed keeps going with its interest rate hikes, Bank of America could be a pretty big beneficiary. Plus, right now it's actually trading for just below its book value for the first time since before tax reform pushed its profits higher. So it's looking like a great bargain right now.
And what's the ticker for Bank of America?
That is BAC.
Okay, good stuff. Well, I'm taking a page from your book here and going with a bank. I'm going with Wells Fargo this week. Ticker is WFC. You know, it has not been a good year for Wells Fargo. Stock down 20%, over really 20% now when you consider today's selling, as they continue to try to put a number of scandals behind them. And over the summer, Wells was required to submit a plan to regulators for improving their compliance and operational risk management. And ultimately, that plan failed to win Fed approval. Not good. That means they got to go back to the drawing board. They're firing around three dozen district managers in connections with the sales practices that got them in this trouble. They continue to operate under that asset cap that you've mentioned before, meaning they essentially can't grow until they have the permission to do so. And I think really this all kind of boils down to me is, should Tim Sloan, the CEO of the company, should he be leading this company going forward? I never really was a big fan of his taking that CEO role because he was the CFO, I believe, before. He'd been with the company for a while, so a lot of this stuff was happening under his watch already. With all of that said, Wells Fargo is a huge bank with a tremendous presence in our mortgage market, and it's not a bank that can just disappear. I mean, everybody's got to determine their own line, but I can't help but wonder if maybe there isn't an opportunity brewing here for folks looking to get that exposure to Wells Fargo. It generally speaking still has a lot going for it. Snafus aside, so worth keeping our eyes on in the coming weeks to see if they can't get their house in order.